Hey, hi everyone. Welcome to another video. So today we are going to discuss about repainting and how this repainting happens in all trend, momentum, and volatility indicators, and whether this happens in indicators like EMA or SI Bollinger Bands, and if it happens, how it can be removed, and what indicators do not repaint, and whether they can be and which time frames they can be used, and which asset classes they can be used, and are there any leading indicators which can predict the market movement, and these leading indicators don't repaint. Okay, so that's what is the topic today, and we'll go through some specific examples of certain leading indicators which don't repaint from Indian, US, and UK markets. So, what is repainting? Repainting occurs when an indicator changes its historical signals after new data arrives. Okay, so that is what repainting is. So, so it changes its signal. So, if it gave a buy signal, for suppose, once new data comes, it becomes a sell signal. So, that is what repainting is. And yeah, so that's what it is. And so during that, if repainting does happen in indicators, and even in the okay, so and it actually allows us, you trade based on that particular signal that got generated. But once new data arrives, the signal changes, right? So your trade will go wrong there. Okay, so that's what it's a primary major thing that repainting you need to avoid, so that you have quality signals, and you can trade based on those signals. Okay. Yeah, so basically repainting is when indicator changes its historical signals. So it will give suppose a buy, and then new data arrived, it gives a sell. Okay, so that's what it changes its historical signals, and making so once this repainting occurs, right? So in the back testing, these signals look more accurate. If you look at the charts at the end of the day, you feel like this is so realistic, and you could have easily taken trade here, 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 and they made so much money. But in the real time, that indicator will be changing a lot, and you won't be able to take that trade. Other than psychology and position sizing and all that also affecting your uh, trade, but this signal also affects your trade. Okay. Okay, so in backtesting it works, but it looks accurate also. But in real time, that's not the case. So that's what happens when repainting occurs. So detect this risk, what we need to do is we need to replay charts, and that replay chart facility is there in TradingView. Okay, and you can use a replay chart. Yeah, and compare saved screenshots. So you need to save the screenshot and then compare it with live signals. Uh, okay, so that's what will help you to detect this repainting risk. You need to set alerts and compare log versus chart data to understand repainting has happened or not. So non-repainting indicators which we can use, which are safe for live trading, are so these indicators calculate strictly from confirmed price bars only, and ensuring the backtested data and even the live data remains same. So ensuring historical signals remain static even during live trading also. So few of the non-repeating indicators which are safe for live trading are moving averages, the EMA as well as the SMA. There are no repenting issues in these. Bollinger Bands, standard deviation channels, RSI, stochastic. These are also safe and widely used. Even pivot points and central pivot CPR. These are all non-repenting, and they forecast the future also to certain extent. Bollinger Band, standard deviation, they do forecast a mean reversion, and RSI gives you momentum, and moving averages gives you the trend. ADX, OBV, MACD, on balance value, these are popular for trend and momentum tools that are non-repainting. Okay. Why they matter? Because when they don't repaint, back testing is reliable. So whatever back testing you're doing, if one, only when the indicators don't repaint, then that those back testing results are reliable, and even forward-looking signals are also accurate. Okay, otherwise You will backtest something, find some results, and you will in the actual market something else will happen. Okay. So most traditional indicators are non-repenting so long as no future-looking calculations are used. So leading indicators that don't repent. So we have lagging indicators, leading indicators. So some of the leading indicators that don't repent and anticipate price movement beforehand are RSI is RSI divergence or stochastic. Uh, these indicators signal you. Give an early signal to you that this is overbought or oversold area. And even divergences of RSI can be used to predict early the price movement. MACD divergences will signal trend weaknesses early. There's no repainting in RSI, stochastic, as well as MACD divergences. OBV and accumulation distribution. This is volume-based early signals. This is also widely effective. So accumulation and distribution. If accumulation is happening, it's a breakout happens. Most likely, it will go up, right? So and similarly is the distribution. That's standard range breakout theory. Uh, okay. So volume also can give you early signals apart from divergences. Okay. Open interest futures options early trends and strength signals is given by open interest for futures and options. It's widely used in Indian and US futures. So real world examples coming to India: RSI 14 signals reversals in Nifty spot. It's validated by consistent swing failures. Okay, so RSI has given reversal signals in Nifty spot market. In USA, MACD bullish divergence on Apple stock nearly 2019 and led to substantial rally. Okay. And UK OBV rising ahead of FTSE 100 breakout in mid 2020 confirmed strength before price move. So these are all leading indicators, and they suggested the trend beforehand. RSI, MACD divergence, and OBV, and they're non-repenting also. So the backtest results as well as the forward test results and the actual results will be pretty much the same. Yeah. Indicators to avoid are repenting risks. Zigzag indicators, fractals, center of gravity. These often repaint by recalculating pivots or smoothing. So those you need to avoid because then your backtest results are not reliable. If a particular indicator is repainting and your strategy is based on that particular indicator, then you can't go with the backtesting results. Custom two perfect scripts that shift signals retrospectively need scrutiny. So that's the thing, guys. So non-repenting thing is signals are and the indicators are good to match your backtest results with your forward test as well as the actual results. There will be slippage in the actual results, but still it will give you a very good estimation of whether you will be profitable, to what extent you will be profitable removing the slippage. Yeah, so all in all, the summary is trend direction. Non-repeating options are: we have EMA, MACD divergence, ADX, and super trend. They don't repaint. They'll provide consistent trend signals. Momentum and reversal, RSI, stochastic, MACD divergence is there. So these give early warning via overbought and oversold dynamics. Volume confirmation, OBV, accumulation, uh, okay, distribution, and open interest will give you buying selling pressure early. Support resistance, Bollinger Bands, SD channels will give you these bands stay static, reliable for trading zones. That's a key takeaways. So stick to non-repenting indicators like EMA, RSI, MACD, etc. And you use replay or alert testing to detect repenting before trading. And reliable leading tools are RSI, MACD divergence, OBV, and open interest, which will help you to forecast movements across markets, India, US, and UK. And you avoid repainting indicators like zigzag, fractals, which have limitations. So that's the thing today, guys. So this is non-repainting indicators and leading indicators, which are more reliable and which match your backtest results with the forward test as well as actual live results. So yeah, that's it for today, guys. Thanks everyone. Have a nice day. Bye.